Hey, everybody, Economic Ninja here. I hope you're doing great. We're going to be talking about gold. We're going to be talking about the dollar. We're going to be talking about some interesting information that B of A just came out with and what gold should be looking like in 2023. Now, guys, as of the recording of this, gold just pushed through its 200-day moving average or past it. Is a very good sign. We're going to see in the next couple of days what happens. But I will tell you this, we are seeing weakness in the dollar, and especially now that the Federal Reserve has came out with information saying that they're looking to slow the rate of rise in the interest rate for the dollar. That means we're going to start to see gold really start to take off. Now, the Federal Reserve is definitely between a rock and a hard place, but good news is they put themselves there by overprinting of the money supply, and they are now sitting there going, "Well, we want a strong dollar. We don't want strong gold because if people see gold as strength, they're going to run into gold." Problem is, every time we raise the interest rates, we start to crash the economy, and that is true. We are seeing that all over in credit card debt, car debt, auto loans and mortgages. So the point is that people cannot take out new debt at these higher interest rates, and the Fed knows that. So there is a point where they're going to pivot, and I can guarantee you this: they will pivot. The only point is how long. Now, the other thing that's helping gold out right now, before I get into this story, and I'm going to link it below, but I want you to understand that another thing that's really pressing gold up right now, even though interest rates are going up and gold is doing phenomenally, both gold and silver, is that investors understand two things. They understand there's only so much of it on the earth above ground. So they're grabbing it right now. We're seeing that come out of the COMEX, the NYMEX, things like that. People are taking physical delivery. But on top of that, what they see is they know that as time gets closer to that impending doom scenario where the Fed has to pivot because markets are crashing, because nobody is spending money, nobody is borrowing money, right? The banks are hemorrhaging money. They can't go out and make new loans because these interest rates are too hard. People are buying gold going into that. So we're seeing premiums explode. Now, guys, I have links to companies that I've worked with for years that I've purchased through that I trust, because I can guarantee you one thing: it is scary going out and buying precious metals for the first time. So I'll put those links below in the description or in the comment section. But here we go. This is a story out of Market Watch. I'm going to link it below. It's entitled "The Fed Pivot Will Be Good for Gold in 2023, Says Bank of America." Another quick thing I want to tell you too is I'm going to be putting out a video on the gold and silver mining companies that I invest in and when to take profits and why it's so important to take profits. So keep an eye out for that video, and it'll be in the playlist entitled "Stocks That I Own." All right. Again, none of this is financial advice. I'm not a financial advisor. Just do with a bro out in a dream. It says it's Jobs Friday again, which is as of the recording of this video. Equity bulls will be hoping for a non-farm payrolls report that is sufficiently cool that it allows for the narrative of a less aggressive Federal Reserve to be sustained. Confirmation from Fed Jay Powell this week that the central bank will slow its pace of rate hikes has helped push the S&P 500 SPX firmly back above the 4,000 level, and crucially, for those of a more technical bent, the benchmark sits north of its 200-day moving average. And again, just like I was telling you about gold, gold just pushed above that, and that is what people look at. That's what traders look at, technical analysis. They look for that 200-day moving average. Once something is above it, looking for it to sort of take off, okay? So that's what they're expecting in the S&P. That is what we are expecting, us gold bugs are expecting in gold. It says underpinning the S&P 500's 14% bounce from its mid-October trough are the recent retreats in bond yields and the dollar moves that are evidently linked to Fed expectations. The dollar index, or DXY, has broken below its 200-day moving average, while the 10-year Treasury yield is threatening to fall through the floor of a year-long uptrend channel. Okay, so as the dollar comes down in value, that is going to be very bullish for gold. But this shift in the buck and bonds is also good for another asset. It's gold. The yellow metal on Thursday, as measured by the COMEX front month futures contracts, jumped 3.1% to recover the $1,800 per ounce level. That's the biggest daily gain since April of 2020. Remember how big of a deal that was, because in March of 2020 is when everything came crashing down. Equities, gold and silver, everything came crashing down. Crypto, and then that next month, April, is when everything started to it started to take off again, okay? So understand how big of a month we've just had in gold. The commodity strategy team at Bank of America, led by Francisco Blanche, thinks gold has further to go. In a comprehensive 2023 commodity outlook note recently released, B of A, the says the price could exceed $2,000 an ounce next year. As of all the precious metals, gold has the most to gain on the Fed pivot. With relatively, and here's a quote, with relatively limited commercial uses, gold has always been driven by investor demand, says B of A, and that demand in turn tends to be impacted by borrowing costs and the dollar in which gold is denominated. So it says, thus, a pivot away from the aggressive rate hikes through 2023 should bring new buyers into the market. And I could not agree more. Honestly, right now, I'm starting to back up the truck on certain gold mining stocks. And I'll just let you know one that I just did is, and I have to emphasize this, I can't emphasize this enough. Don't chase stocks as they go up and they now go down. Okay, cool. Buy into weakness if you believe in the company. But one stock that I just bought, and I bought more of because I own it, but it's on weakness. The company is still drilling and doing things. It's an exploration company called Reyna Gold. It's an OTC stock. And I put in a buy order at 10 cents. We'll talk about a micro cap. I think the market cap of Reyna Gold right now is like $9 million. But it has an amazing geologist behind the company, Peter McGaw. And so I put in a buy order, a limit buy order in, and I waited for it to come into the 10-cent range, and then I was buying up shares. So I'm letting the price come to me. So that's just one thing that I'm doing, because as gold goes up, these stocks tend to just jolt forward because algorithms and traders get into a frenzy. And when gold hits that 2,000 mark and goes over it and closes over it, wait till you see what happens in these gold mining stocks. Now, this isn't, again, financial advice. It's what I'm doing, right? I'm buying on weakness. I'm buying things that nobody wants, that everybody hates. I'll get laughed at, but it's just like I did with cryptocurrencies and real estate back in the early 2000s and the early 2000 teens. Sorry, mid 2000 teens. All right, so it says right here, the latest survey by the World Gold Council suggests this trend is unlikely to change, with 25% of central banks expecting to increase their exposure to the precious metals further, compared with 21% last year. So again, central banks have been huge buyers of gold, and to think that they're going to actually increase those holdings is pretty darn impressive. And I'm going to link this story below because it has a really good chart of central bank gold purchases. And I think people need to pay attention to what's going on with this, because it tells a really good tale of how scary the markets were from 2016 to 2019 before that came along and they shut down the world's economies. And I can guarantee you this, it was not just for the, it was because the world's markets were imploding and world governments were freaking out and trying to figure out a way of stabilizing it. It says here, however, central banks made up only 20% of what B of A terms total implied investment for gold. So their interest is not sufficient to really get a rally going. For that, gold needs increased demand for bar hoarding, physically backed ETFs, OTC net investment, and official sector purchases. Now it says annualized gold purchases year to date place the gold market squarely into the $1,500 an ounce and $2,000 an ounce range. Encouragingly, for gold to fall to the lower end of the range, recent investor liquidations and outflows from ETFs would have to accelerate, which is not our base case, because we expect a bottoming out in the USD and less update to the 10-year rate, says B of A. So right there, B of A is telling you right now, they're expecting the dollar to fall along with the 10-year bond. So it is going to be very, very interesting, especially on the heels of this mortgage crisis where people aren't taking out mortgages, they can't afford it. And even with the 10-year falling, it's not going to fall sufficiently enough for people to still be able to afford the price of the home, coupled with even the currently lower interest rates, mortgage rates. So you're going to see people flooding, taking their money and going, where do we put it? And honestly, I believe in 2023, you're going to see that moving into gold and silver. I like silver more than gold, but gold is more steady and it has less fluctuations. So guys, there is the story. I'm going to link it below. Go ahead and take a look. And guys, honestly, in the comment section, I'm going to put the gold and silver companies. If you've never bought an ounce of gold or silver in your life, or platinum or palladium, these are the companies I've worked with, that I bought from, that I trust. All right, guys, with that being said, I thank you so much for watching. The Economic Ninja is out.